Welcome back to Squawk Box. Rents in New York sitting near record highs, and with a lack of inventory and a strong jobs market, it's adding to the inflation pressures facing the Fed and the markets. Robert Frank joins us right now with more on all of it. Robert.
Good morning, Andrew. Well, the median rent in January hitting $4,100 a month. That's up 15% over last year and marks the highest January on record. The average rent in Manhattan is still above $5,000 a month. And by the way, more renters are actually paying it. The number of new leases in January jumped by 8% over December and up 9% over last year. Real estate brokers saying New York's strong job market is keeping up demand, and low inventory means they don't have a lot of choice. The vacancy rate is now only 2.5%. That is well below the typical average of over 3%. Corcoran's saying these high prices are the new, quote, equilibrium in Manhattan. That's why brokers say they don't expect these rents to come down at least for the next 6 months. The top end may move even higher as wealthy buyers stay in rentals until the sale prices move lower. Nearly 1 in 5 luxury rentals in January actually saw bidding wars. Andrew?
Robert, we were talking about just how crazy New York City has become in terms of pricing. Is this happening everywhere?
I mean, rents are falling throughout the country broadly, right, and everyone expected Manhattan would start to fall. We had this huge run-up in the summer and early fall, and everyone said, well, by January, because we started to see inventory rise and people were not leasing, January we're going to see a decline, and it hasn't. And this is really important because even though the rest of the country is seeing a decline, Manhattan, New York is the largest rental market. And as we've been talking about, housing is a huge component of the CPI. And so if the largest housing market in the country is not seeing a decline in rents, that's really going to put continued pressure upward on inflation and certainly not going to help it come down. So this has a big CPI impact as well.
Right. But what's the I still don't really get what the explanation is. Meaning, if rental prices are going down everywhere else except here, who are the buyers or renters in this case?
In this case, you know, it's a strong job market. Some people say that basically because New York was sort of late to the game in every phase of the housing boom and decline throughout the pandemic, we're now seeing prices sort of start to moderate. And what's happening is a lot of people are sitting on the sidelines in Manhattan waiting for the sale prices to decline. And that's why you're getting not just the normal renters, but otherwise people who would be buyers now becoming renters. And all the new product in Manhattan that's being built over the last sort of couple years is new condos for purchase as opposed to rentals. So you've got a whole new cohort of rentals, but no new product that's coming on the market as rentals. So it's really a supply issue right now as opposed to, and a strong demand, but not a huge increase in demand. And maybe, you know, return to office, too. We're seeing in Manhattan especially more and more people return to the office. That may bring more people back to Manhattan and say, look, I have to be in the office more. I want to live in Manhattan again to be closer to the office to avoid that long commute.